Andrea MacDonald, welcome to Beyond Tax Season podcast. And folks, I'm your host, Trow, and today's episode is one we've been excited about for a long time. Truly, it's like 3 months now. Our guest is Andrea MacDonald, a CPA and founder who's been quietly rewriting the rules of firm ownership. Andrea launched her firm back in 2013. Correct me on that date if it's wrong, to escape burnout. But like so many, she found herself trading one kind of cage for another. 10 years later, she runs a subscription-based firm where tax season is obsolete, no one works weekends, and her team members, get this, can take paternity leave in March. In this episode, Andrea walks us through the 10 things she wishes she knew when she started her firm, including one bold move that lost her 44% of her clients overnight and ended up raising her revenue by 23%. If you've ever questioned the grind, if you've ever wondered whether it's possible to do meaningful work without sacrificing your life, and if you're looking for proof that a better firm model isn't just possible, but profitable, you're going to love this conversation. Let's get into it. Andrea, pick up with that quote.
Yeah, I was just saying, like, if I could go back 10 or 13 years and start over, I would do things so much differently than how I started them. Yeah.
So start listing some of those.
Yeah. Probably the first thing I would do differently is pricing. Like many firm owners, when I started, I was charging very low fees. I did not fully understand the value of what I know and the time I've spent learning what I know and the value that we bring to clients. I was, I mean, when I got into my tax firm, it was really a volume game when I started out. I started by joining a national tax franchise, which is very volume based, right? Very price sensitive, very volume based. So that was my start. And when I left that franchise to start my firm that as it is today, it was with the thought that I would do that differently, but then I didn't execute differently. So what I found was that I was just rebuilding some of the same thing I already had. And it really started with just pricing too low. So know your worth, people.
Well, that is that's a transformation. One of my clients, I met her at 1 million and just talked to her on Saturday, and she said, "Oh no, Troy, we're not 2 million, we're 3 million now."
Right
Where did that
on.
where did that come from? That came from the whole Ron Baker, value pricing and doing tax plans at 50 grand a pop. You know, and what did Andrea MacDonald teach us over 5 years ago, writing in the Journal of Accountancy that 35% of the anticipated savings is not over the top. It's a reasonable fee. I will tell you, a lot of people have trouble with that one. But okay, so pricing.
Yeah.
Now, one thing else, when we first talked, you talked about tax season is a choice. What does that mean?
We uh, tend to let our tax season control us. We think that April 15th is the most important date on the calendar for the year, and I would like to challenge that belief. Obviously, October 15th is the more important date because we don't get any more extensions after the first extension, but we get on this hamster wheel where we're just grinding through tax returns as quickly as we can, as many as we can, working at our desks for crazy hours, eating at our desks, not getting up and walking. So we decided to take control of our tax season, and now we schedule out all of our tax work. Every single tax return gets scheduled, all of the tax work gets scheduled, and this allows my team to be clear-headed when they work on tax returns. We don't work nights or weekends unless for some reason the team member wants to work a nighttime shift or whatever. Like if working at night works better for them, fine, work at night. But we don't work overtime. We don't stress about the April 15th deadline. We lean heavily into extensions because we're doing more than just tax prep. So we are able to spread our tax work out all the way until October 15th, which just makes for a much more sane, calm experience.
So we remember that our audience is CPAs. They are tax practitioners. They are
Mhm.
professional accountants. I want to expunge the word bookkeeping from the vernacular.
Yeah.
It's professional accounting. So they understand what you're talking about. How do you train the clients to know that they've got a slot in time on your calendar and
Mhm.
you're committing that time to them? What is their commitment? How do you communicate their commitment so you can both work together to make that happen?
So just like when I changed our pricing strategy, it was I got to my breaking point and I decided overnight to make a change. The same kind of thing happened with us last year. I had been hearing from people like Brenda Cannon and Jacob Oberlander who were talking about scheduling out their tax season. So the thing that we did is not a unique idea. There aren't many firms doing it, but there are a couple and they're pretty vocal, especially Brenda on social media. And so I just got to a point where I realized I could not have another tax season where I was worried about clients being upset, where we couldn't clearly communicate expectations for when returns would be done. And so I recorded a short video on Loom and I sent a mass email to all of our clients saying, new process coming this tax season. We'll send you more information in November or December or whatever I said. It's going to be great. You're going to love it. And that was the teaser that went out. And then it was either end of November or the very beginning of December. I think it was the end of November. I recorded a longer video where I talked about the calendar process that we were launching, why it was important, why it would be beneficial for them, right? We try to tackle all of our changes from the client perspective, like why it's good for them, not why it's good for us, because frankly, they don't care if it's good for us. They care about themselves. So we always try to frame it in like, this is why it's better for you. And in that video, walked through here's the link you're going to get. Here's what it looks like. Here's what happens when you click on it. Here's what the calendar looks like. Here's how you pick your date. Here's what the confirmation looks like. And here's what it means. And I sent that in a chat in TaxStone to all of our tax clients. And then the calendar link dropped, I think it was December 1st. We're like, all right, here's the link. Pick your dates. Let's go. And that was it. We didn't give people a choice. We didn't give them a huge amount of notice.
Wow.
Um, we got surprisingly little pushback. On
Hmm.
the video where I recorded how this was going to work and how to pick a date, we had one client comment on that video to say, this is silly. We don't know when we're going to get our documents. And I just replied back and said, well, look at when you got your Schwab statement last year and then pick a date after that this year. Like, and then that was it. There was no other pushback. Um, we did get a lot of positive feedback from clients who said it was really nice to have some transparency because what we communicated to them was you pick your date. And for us, the date they chose was their due date to upload all of their documents and complete their tax organizer. We told them we're not going to start your return before that date. So you have until June 12th or whatever date you picked. We're not going to start your return until June 13th, but then we commit to having it to you within 3 weeks. 2 weeks for prep, 1 week for review, and then deliver. They're like, this is great. Now we know when to expect our tax returns to be completed. We were not able to do that before. So, for the most part, clients appreciated the transparency.
What about the top up the anticipated tax bill? How did you handle that loop?
You mean the OB3 stuff? One Big Beautiful Bill Act?
No, the you're probably going to owe about 15 grand based
Yeah.
on what happened last year, that kind of thing. How do you handle that round of communication and execution?
So when we switched to the subscription model, we added in tax projection meetings. So we're meeting with our clients at least once. Some clients are in a package that includes more tax projection meetings than that, but like October, November is when we're conducting all of our tax projection meetings. We project out the client's tax liability. We basically create what we think their 2025 tax return is going to look like or whatever year it is so that we can tell them what we think their liability is going to be and how much they need to pay. Now, when we deliver tax returns, we deliver them with estimated payment vouchers, but in some cases, our clients, in most cases, their returns aren't completed before April 15th, and they don't look at that stuff anyway. So we are actually having a meeting with clients, and this is a live, not in person, but a live meeting. We're talking through anticipated changes. Did they start businesses, sell businesses, buy a house, sell a house, have a baby, whatever, got married, got divorced, all those things. We're projecting out and then we're telling them what we want them to pay in estimated tax payments. So that when we file extensions, because we file extensions for 100% of our clients, we're not filing zero extensions because we already know what they're going to owe. We've already done the work. So they have a heads up.
Do they have to write the check? I have some clients that actually have access to the bank account and they make the payment. Or is there
Yeah.
some automatic? How does the money move?
We don't move money for our clients. It's interesting. We want to be thought of as their trusted advisors. We want a more white glove experience. However, we do need our clients to be at least partly involved in their tax lives. And so for us, that means they have to make their own payments. That's how they stay involved.
Okay.
So we don't schedule direct debits even as part of tax returns. We don't schedule direct debits for clients balances due. We have them remit payments. Now, when we send them their tax projection or we send them their tax return recap video, we provide step-by-step instructions with links. Here's where you pay, here's a video showing you how to do it. So we do give them all of that, but we do make them actually send the money.
Tax return recap video.
Hmm.
Okay, put a pin in that one. Then the subscription model and periodic tax projection meetings. So go out 1 minute later bigger. And when did you make that switch from, remember we had that one episode where somebody dropped off all their stuff and called you a day or 3 days or even the next day and asked you, are you done yet?
Yeah, yeah.
Back when you were doing piecework. So now it sounds like you've got this almost arms around you relationship that centers on tax at a minimum, tax prep and return preparation filing. But what else inside the subscription model or your different flavors of your subscription model have you brought into being?
Yeah, so it's iterated a few times. Earlier this year, we pared down our tax offerings to just one package. We used to have like three package levels that included, it varied in the number of meetings per year and it varied in a couple of other points, but we realized all of the clients who are going to work with us, who are going to work with a firm like ours, where it's more than just you pay $700 for a tax return or whatever, they all have similar needs. Some are more complex than others, but everyone needs some level of tax planning. Everyone wants to not only write tax projections, mitigate penalties, tax planning mitigates tax liability, right? So everybody wants some level of tax liability mitigation. And before, none of our packages included tax planning. That was a separate service. So we scrapped our old packages and now we have one tax package. Everyone coming in gets the same services. Again, some people's tax situations are more complicated, so the tax plan might be more complex, but everyone gets a tax planning meeting, so a one-on-one strategy session. They get the tax plan delivered to them, and then we'll help them through implementation throughout the year. They get a tax projection meeting, at least one. If they're in a highly volatile industry, or if their income, or if they're in a really, big growth phase in their business, we'll do more, but everyone gets a minimum of one. Then the tax return preparation for us is kind of the period at the end of the tax sentence. The tax return is no longer the main focus. What the real value is in the planning and the hand holding and the projections and the unlimited support. Our clients can meet with us as many times as they want. We don't put a cap on how many times they can request meetings. We're reaching out to them proactively throughout the year as things come to mind, like, hey, we saw this and we thought of you. So the tax return is still important, but it's no longer the focus of the service. It's just kind of the end of the sentence. So all of our clients now are in a package that includes that. And we still have clients in our legacy packages. And as we, update agreements, they'll all get moved to this new package, but all new clients coming in get this one package.
Got it.
Yeah.
So I heard those magic words, tax planning and then implementation. Does the implementation come with the basic core service?
This is a thing, this goes back to pricing. I probably could be a $3 million a year company if I were better at pricing that piece. Um, there are people, and the way that I was trained was You charge for the tax plan, you charge for implementation, and then you charge for maintenance, right? It's a kind of a three-piece, and people could opt into one or all of the services. We're not there yet. As this, as this, as we move forward, we're kind of moving up market the level of clients that we're working with. But right now, we don't have a huge number of high net worth clients. So our clients are more like middle to upper income, like middle America. So
Yeah,
tax planning isn't super,
let's
super
use
complicated.
let's use numbers. We're financial doctors here. Let's use numbers. Yeah, so where are you now in terms of that ICP and ideal client profile, and where do you want to be?
Right now, our average client is probably, I would say, 150K to 350K of taxable income, which
Hmm.
is good enough for living on, but there's not a whole lot of tax planning meat there, right? So our tax plans at this point are not super, super complicated. We're
Hmm.
running through all the potential strategies, but a lot of them don't apply to people at that income level. As we move forward, we're going to be focusing more on people that are like 500K to a couple million, probably. Um, as that happens, we'll probably have to change how we're pricing for our packages. But for right now, with the types of clients that we're working with and the complexity of the tax plans that we're putting together, we don't charge separately for the plan or for the implementation. It's a
Ooh,
fixed monthly fee
ooh,
that includes everything.
mm,
So, yeah, there's
mm.
there's going to be some pricing changes that come as we start getting into those more complex cases.
Okay, so that just brought the thought of AI, automation. Uh,
Hmm.
one of my clients used the phrase last week, you know, within 2 years, with AI and automation, we will just blow the tax return a kiss on its way to the IRS. Now, obviously, at more and more zeros in the AGI or taxable income, that and the nuance of all the different entities and that kind of thing, where you bring that into the tax plan, that will not be the case. But on a $700 return, that's barely even a kiss. That thing just went from W-2, 1098, 1099 straight to the government, right?
Yeah. Yeah, it's interesting. This is a hot topic of debate whether compliance tax services are going to go away because AI will be able to do it. I don't necessarily think they're going to go away entirely, not anytime soon. I do think it is still entirely possible to have successful and profitable compliance-focused tax practices because there's always going to be people who want to have a person, right? Looking at their stuff, they want to talk to somebody. They have comfort in knowing there's a human, whether it's a CPA or an EA or whatever, looking everything over and making sure it's accurate, even if that person is using mostly AI to prep the return. So I still think there's room for that. I just knew that um, the number of those we'd have to hit the level of like how I define success for my firm was not sustainable. So I decided several years ago to lean more into the relationship side. And I think that is the piece that's going to keep AI from taking all our business.
Not a question.
Yeah.
And the leaders in AI thought that have been talking about it, thinking about it for 7, 8, 10 years, and are out there actually having the conversations. That's exactly what they say. You've got to realize parts of your job will go away or be
Mhm.
much less valuable because they're so easily delivered. But the human side
Yeah.
is uh, especially as you add more zeros to your target ideal client profile, the wiggly lines about should they do this or should they do that, uh, or relationship all day long.
Yeah. Our motto is that we use technology where it makes sense so we can use our people where it makes sense, right? Like, I think accountants who use AI are probably going to replace accountants who don't use AI. Maybe
Hmm.
that's more likely.
Hmm.
We want to automate everything that makes sense to automate so that
Hmm.
it frees up our people to handle the people part. I don't think the people part is going away.
So a term I use is brain fat because, and I bring that up to into the conversation to say, when you get the call from the client, hey, I just have a quick question.
Yeah.
uh, that immediately turns you to using your brain fat.
Mhm.
right? And we only have so much energy or brain fat per day. So how do you handle that within this one price, one size fits all when they ask you a question that is going to burn your brain fat?
So we address this in a couple of ways. We make very clear in our communication policy that we do not take unscheduled phone calls. So if you call our number, it goes to voicemail. You will never have the option of getting a human being answering the phone. Go straight to voicemail. All of our calls are pre-scheduled. And that's because, and again, we always frame everything and how it's beneficial to the client. The way I explain this to people is I want to make sure that whatever of my team members is fielding that question, the client has their undivided attention. There's no context switching. There's no, let me put this tax return down so I can look up this client's whatever and then get back to this tax return and get back to whatever. There's no jumping between tasks like that. So whenever a client gets on a meeting with us, they have our full 100% undivided attention and sometimes multiple people depending on what the question is. They might have their CSM and an accounting manager or CSM and a tax manager. So full undivided attention. And that's how we tackle that. Now, in our packages, because we say they include unlimited support, the question I usually get is, well, how do you handle that? How do you handle all those questions? There aren't that many. Very few people take full advantage of the unlimited support that we offer. In fact, some clients don't take advantage of it all. They're out here just willy-nilly making decisions even though we stress to them, like, we want you reaching out to us. We want to talk to you. Please call us before you do anything. So we've taken to periodically reminding people, like, hey, don't forget we're here. We haven't heard from you in a month or two. And like, you probably have questions. Why don't we get on a meeting and just check in?
You know, that's the title of Ed Mindlowitz, one of Ed Mindlowitz's books. Call me before you do anything.
Yes. And it's surprising to me how many people don't, even though they're literally paying us for this support. So while you may have a client or two or a handful of clients who reach out to you all the time and who eat up a lot of your time, in my experience, by and far the majority of people aren't utilizing that option at all. So,
You know what I'm saying, because you're so comfortable with the communication via video and Loom, is that you could probably do 10 Loom videos and do a looping email campaign around, hey, did this happen to you this year? Be sure, or are you thinking of doing this, so that it stays fresh?
yeah.
I'm not trying to create more work for you, but it's so much easier to fix it before it happens than after.
And sometimes, one of the things when you move to a subscription model like we have on the accounting side, it makes sense. There's at least a monthly deliverable, but on the tax side, there isn't a monthly deliverable. So sometimes there's a disconnect for the client. Like, why am I paying every month, but I'm not getting something every month? Because tax is not a thing that's delivered every month. So having those periodic proactive reach outs like, hey, we saw an article about XYZ. If this is a thing that's happening in your business, reach out to us or whatever it is. Or like you said, put it on a once a month email loop. It helps connect the value proposition with the client's payment frequency in the client's mind.
Yep, yep, yep,
Yeah.
yep. So I'm going back over our list that we developed back in wow, September, if not before.
Wow.
And we had
Hasn't been that long.
yeah, yeah. You're not running a nonprofit. Raise your prices.
Yeah.
See, tax season is a choice. We've touched that one. Burnout isn't a badge of honor.
Yeah. How many times have you talked to somebody or you talk to a tax firm owner and they talk about how many returns they file and how many hours a day they work during tax season? Like,
Well, the
those
one
are,
yeah, it's ubiquitous. You're an exception. Anybody that's been exposed to the Professional Association of Small Business Accountants whole machine knows that, we can schedule tax.
yeah,
We don't have to have that thing. But the one that really drove me to, and I quote it, is he said, "Look, for 105 days a year, I will not be available to my clients and my family."
yeah,
That's not a badge of honor. For that's over 3 months that your growing, needy business owner clients can't have any of that brain fat. That's not good.
And I talked to some people who focus heavily on tax, and they work a lot of hours for that 105 days, but then they barely work the rest of the year, and that's the lifestyle they love. And that's great. If that's the model you want to be able to not work all summer, great. For me, that wasn't what I experienced, and that's not how I want to work. For people who do, fantastic. Tax is great for you.
Yeah.
For me, and like I'm very protective of my mental space, but even more than that, I'm very protective of my team, my staff's mental space. And I'm trying to think, everyone who works for me, except I think one person, has kids. And the one who doesn't is my son, and he got married this year. So I'm sure he'll have kids at some point soon. So everyone who works for me has kids. Kids grow up fast. I didn't have a job like this. I didn't have this business when my kids were little. I worked stupid hours and I was in an office or out of town. I traveled for work. So, like, I missed so much of my kids' childhood. So, it's important to me to make space for people to prioritize their families. My personal core value is to build a company where people can build work around their lives instead of their lives around work. You will never hear it uttered in my firm. I can't have a baby, or we have to wait to get pregnant so we don't have a baby during tax season, or the things that you hear at larger firms. You will never hear that. We built our entire tax season calendar around our full-time tax person needing paternity leave from mid-March to mid-April. Like that's my personal core value. So that's a metric I'm proud of. Unlimited PTO and how many hours my people use. You often hear unlimited PTO means no PTO. I make sure my people take PTO. Our lowest usage so far this year is over 100 hours. So those are the metrics that I'm proud of. Not, I couldn't even tell you how many tax returns we filed because I don't know that off the top of my head. Like the number of hours I work per day, I'm more proud to say 6 than to say 16, right? So I just,
Let's do some metrics. How many clients and what's the size of your team?
we are a team of 9, including me.
Mhm.
Um, Number of clients, I don't know exactly. I could go into TaxDome and pretty quickly figure it out, but like I don't have it memorized. I would say probably right around 100 bookkeeping, accounting clients, and probably about 150-ish individual returns and about 80 or 90 entity returns.
Got it.
So
Got it.
we're fairly small.
Yeah, yeah, yeah.
Yeah.
So let's that triggered something, but let's keep going on this list. Stop serving once-year stragglers. You did that with here's your tax return date. We didn't talk about them missing their deadline.
Yeah, that does happen.
What do you do with them?
Yeah, so there's a couple of ways we address it. If their deadline comes and they haven't uploaded anything, they just have completely blown us off, they can move to the back of the line. We send them a message saying, you missed your date, you didn't give us anything, your new date's in August or whatever. If they've uploaded most of the stuff and are missing a couple, the way we built out our calendar, we have space to go back and forth with clients and not make them move their date. So we give them some opportunities to get us what's missing, and they just kind of set on the back burner until they get us whatever we need. So it kind of depends on what level of missed to the date
Sure,
they
sure.
are.
And then the next one was if they don't want to change, release them. How has that happened? Because our first conversation, you had that great experience the first time, but then you did it two more times,
Yeah.
and it was getting a little close to the bone.
Yeah. It's always, I think one of the things accounts are afraid of change in a lot of cases anyway, and we're always afraid that clients are going to leave. Sometimes clients need to leave, right? Bad clients leaving makes space for better clients. There is a tipping point. We can only afford to lose so many. So there's always that, like, if I make this change and I lose too many clients, I have allowed myself in multiple points in the past get to the point where I have no choice. It is so broken. I am so burned out that I don't care if everybody leaves. I will mortgage the farm or whatever to make it work. I don't always advise that, and not everybody is in a position to do that. So you just got to be choosy, I guess, with what you roll out. We have taken the tact, like when we make a big change, like moving to a scheduled tax season is a big change, it's not optional. We just have to hope and pray that enough people stay that I don't go bankrupt. And so far, every time it's worked, right? So far, all these major changes have either resulted in more revenue for fewer clients or similar number of clients, like not many left, and a much smoother season. So
Got it. Got it.
I think
Uh,
it's more, we build the fear up more than what will actually happen.
so we've talked a lot about accounting and tax planning. What about advisory around profit growth, around business operations, about helping your business owner clients build better businesses? Have you touched on that at all?
So we don't offer like CFO level services right now, although we had our in-person team retreat last week and we are planning to add it. Um, Initially, like I acquired a firm in September of 23. So I had my existing firm. I acquired a firm in September of 23. And then in February of 24, I merged yet another small firm in. So it was a rocky couple of years. We were just focusing on like the table stakes services and getting really good at delivering those and building a slightly deeper bench. So now I have a business partner, Jeremy Wells. He's a CPA and an EA. We brought on Matthew Cordes, who is an EA. So we have now more than just me who can have, POAs on file with clients. And we have some help on the accounting side. So we are now talking about adding some CFO level services back in. We're working through who our ideal client is for that because it's different than who we've targeted for our other accounting services and what types of CFO services we want to offer. So we don't offer them yet. When we do, it's going to be a pretty narrowly focused target client and set of services.
Got it. Got it. Got it. Uh, okay. Let's make sure we come back to that. I do want to put something in the record. Have you ever read or heard anything from Edie Osborne or Jeannie Whitehouse?
So I have not, but I've met Jeannie Whitehouse. I was at a retreat with her last year, and she is really awesome.
How about let's talk about that,
Yeah.
because I just had her on as a podcast. It was like kindred spirits. She had been I heard of her. She had an interview with Michelle Weinstein, and I said I want to talk to that lady. So she agreed to the podcast. We had the podcast, um, and it just became so apparent that she's passionate about helping the business owner. She's passionate about CPAs not burning out.
Hmm.
That is aimed at the granularity of the CPA's mind.
Hmm.
Did you talk to her at all about that? Did you hear her speak? What was your experience there?
So she presented at a little kind of a small retreat that I was at in Arizona last year. So we didn't have a whole lot of time one-on-one. We didn't really get to dig into too much of that stuff, but I'm on board with it so far.
Well, then let's put this in the record because I'm going to follow up with you after this. I think we could find some good common ground. But the reading the book Firm Forward by Edi Osborne. I think it's with a U. Doesn't matter. You'll find it. If you're a Amazon person, it'll show up right away. Uh, it's one of those Patrick Lencioni told by parable stories.
Okay.
And I don't mind admitting here, I've only had one other business book do it to me, but I cried my eyes out.
That's high praise. I got to check it out.
uh, because as AI eats away more and more of this low value work, it creates a foundation for that deep relationship. So you could have 50 or 60 clients. Can you imagine a team of 10 only having 60 business owner clients?
Yeah.
And and
Yeah.
and and 60 times 50 grand, or she does 5 grand a month is the top tier. But if you do it that math, that's 5 grand a month is 60,000 a year times 50. That's 3 million, and you're only working with 50 clients.
Yeah. Yeah. Part of what we realized again, we did a lot of discussion at last week's in-person team retreat for Steadfast about who our ideal clients are and what services we want to offer, we like offering. And what we've realized is we're going to have to move a little bit up market. Like historically, we've worked with really small or what I call micro businesses. That's not really going to be our target demographic going forward because we want to start getting into some more of the meatier services and they just can't afford it or don't need it. So we'll be moving up market. You know, we kind of redefined who our ideal clients are. There's a lot of moving parts, but
Well, and yeah, so I was going to cap it at advisory is the future. The relationship is the future. And where we can be most valuable is when there are 5 zeros in five, no, 6 zeros,
40, 60.
6 zeros in the AGI.
Oh yeah, yeah.
When you get to a million of AGI and they're so deep into the top federal bracket, there are a lot of alternatives that you can show up with as with a huge value and charge for it.
Yeah.
Uh, well, Andrea, this is great. You want to kind of recount the history, how we first met, and how we kind of crossed paths back and forth, and then we'll wrap it up.
Yeah. I'm trying to think back, like if I remember correctly, weren't we both in Charlie Price's group? I think that's how we met initially.
I think it was Ben Brown.
Oh, entrepreneurial account. Okay. So that would have been before Charlie's stuff.
Yeah,
Yeah. So all this to say, like, this just highlights it's been a while. It's been kind of a meandering lose contact, regain contact.
2020. So
Okay.
5 or 6 years. It's been a long 5 or 6 years for me. I don't know about you.
Well, like those COVID years are like a just blank space. They're like a black hole.
Right, right, right. Well, Andrea, so great to have you on Beyond Tax Season podcast. I think the message that you bring to firm owners is so uplifting because you just decided to do it and did it and it worked.
Yes, we didn't fall apart. I haven't gone bankrupt. It's working.
That's great. That's great. Well, we'll see you around the campus.
Sounds great.
All right.
Thanks for having me. Bye.